Alright, listen up you bulls and bears. Today, May 30th, 2025, we're diving deep into the world of CTS Eventim, the ticketing and live entertainment giant. And guess what? Baader Bank, those savvy analysts, are sticking to their guns. They've kept their ad rating on the stock. Now, what's an ad rating, you ask? It means Baader Bank thinks this stock is a good one to, well, add to your portfolio if you're looking for some potential growth. It's not quite a screaming buy, but it's a solid nod of approval, a signal that they see good things on the horizon for Eventim. This isn't just some random thought. This came out in a flash analysis today, hot off the presses. So pay attention, because when a bank like Baader talks, smart investors listen. Now let's talk numbers, because that's where the real story is. Baader Bank isn't just saying ad for fun, they've got a price target to back it up. They're looking at CTS Eventim and saying, we see this stock hitting 112 euros. Catching. That's a nice potential upside from where it might be trading. A price target like this gives you a roadmap, a destination that the analysts believe the stock can reach. It suggests they've crunched the numbers, looked at the company's strategy, and feel confident that there's more room for this stock to run. It's a beacon of optimism in often choppy market waters, telling investors there's value to be had here. So, why the continued optimism from Baader Bank? Especially when, as we'll see, not every financial metric is shooting for the moon. Well, these analysts are looking beyond just one quarter's mixed signals. They're likely focusing on the fundamental strengths of CTS Eventim. Think about it. The live entertainment industry is roaring back. People are desperate for concerts, festivals, and shows. Eventim is right in the thick of that, selling the tickets and organizing the events. Baader probably sees the company's dominant market position, its smart strategic moves like recent acquisitions, and its ability to generate cash as key reasons to stay positive. They're playing the long game, folks. This kind of endorsement from a respected institution like Baader Bank is more than just an opinion. It's a confidence booster for the market. When analysts reiterate a positive rating and a solid price target, it can help stabilize a stock and attract new investors. It tells the average Joe investor, hey, the experts think this one's got legs. It's a green light, or at least a flashing yellow, suggesting that the potential rewards outweigh the risks for those willing to add CTS Eventim to their holdings. Remember, in this market, you need all the good intel you can get, and Baader's call is a significant piece of the puzzle. Don't ignore it. Alright, let's get down to brass tacks and look at CTS Eventim's first quarter 2025 numbers. Hold on to your hats, because the revenue figures are something to shout about. Sales or revenue for the quarter ending March 31st, 2025 came in at a whopping 498.59 million euros. Booyah! That's nearly €500 million, folks. And get this, it's a 22% jump from the 408.73 million euros they pulled in during the same quarter last year. Not only that, but they blew past the IBS estimate of 440.2 million euros. This tells me the demand for live events is absolutely on fire, and Eventim is cashing in big time on selling those golden tickets. That's the kind of top-line growth we love to see. But hold your horses, because it's not all sunshine and rainbows. While revenue was rocketing, the net income took a bit of a tumble. We're talking 46.1 million euros for Q1 2025. Now that's still a decent chunk of change, but it's a 31.7% decrease from the 67.51 million euros they banked in Q1 2024. So, what gives? According to the company, this dip was mainly due to a couple of pesky culprits: smaller returns from their investments and some unfriendly currency effects on their long-term receivables. It's a reminder that even when sales are booming, other financial gremlins can mess with the bottom line. It's a complex picture, not just a simple up or down. The earnings per share, EPS, from continuing operations also followed net income's downward path. Basic EPS landed at 0.48 euros, which is down 31.4% from 0.70 euros in the first quarter of 2024. This is a direct reflection of that lower net income we just talked about. When net income shrinks, there's less profit to divide among all the shares. So the EPS naturally takes a hit. Investors watch EPS closely because it's a key indicator of profitability per share. So this decline is definitely something that would have caught the market's attention, and not in a good way. It's a bump in the road, no doubt about it. However, don't despair just yet. there's another important number to look at, the operating profit. This is the profit before you account for things like interest, taxes, depreciation, and those pesky special items. And here's the good news. CTS Eventim's operating profit actually grew by 9% to over 100 million euros. This is crucial because it shows the core business, the actual ticketing and event management, is still performing strongly and becoming more efficient. It means the underlying operations are healthy and generating more profit. So while net income was down due to those external factors, the engine room of the company is still chugging along very nicely. That's a key takeaway. Now let's talk strategy, because a company isn't just about one quarter's numbers, it's about the moves it makes for the future. And CTS Eventim has been busy playing chess, not checkers. A big reason for that fantastic revenue growth we saw in early 2025 was their smart acquisitions. They brought C-Tickets and France Billet into the Eventim family. These weren't small fry, these were significant players in the ticketing world. By snapping them up, Eventim didn't just add their revenue streams, they expanded their market reach and consolidated their power in the industry. That's how you grow, baby. Buying up the competition or complementary businesses is a classic growth play. And these acquisitions aren't just sitting on the shelf gathering dust. The company has reported that the integration of these newly acquired ticket providers is proceeding as planned. This is super important, folks. It's one thing to buy a company, it's another thing entirely to successfully weave it into your existing operations, cut out the fat, and make the whole thing run smoother and more profitably than the sum of its parts. A smooth integration means Eventim is on track to unlock those juicy synergies, think cost savings, shared technology, and a bigger customer base. This is where the real long-term value from acquisitions is created. They are building a ticketing empire. It's not just Baader Bank that's keeping an eye on Eventim. The whole analyst community is buzzing. Let's look at the Wall Street scorecard. UBS is waving a buy flag with a target of 119 euros. JP Morgan is overweight. That's another thumbs up, with a 114 euros target. Jefferies says buy and aims for 127 euros. Barclays recently jumped in with an overweight rating and a hefty 130 euros target. Even Bernstein is reiterating its buy call. Now, DZ Bank is a bit more cautious with a hold and a 106 euros fair value, but the overwhelming sentiment is bullish. These guys get paid to analyze companies, and most of them like what they see. When you take all these analyst opinions and crunch the numbers, you get a consensus average target price of around 113.62 euros. Compared to the recent stock price of 105.80 euros, that suggests a potential upside of about 6.38%. That's not too shabby. This collective wisdom of the analysts gives investors a good benchmark. It shows that, despite some of the Q1 profit wobbles, the smart money on Wall Street believes CTS Eventim has more room to climb. It's like having a whole team of financial advisors pointing in the same general direction, upwards. This widespread optimism is a powerful force in the market. So how has Wall Street actually reacted to all this news? Let's look at the tape, because the stock chart tells a story. As of May 30th, 2025, CTS Eventim stock was trading around 105.80 euros. Now, if you got in at the beginning of the year, you're probably smiling because the stock is up a very healthy 29.45% year to date. That's a fantastic run, outperforming many other investments. However, in the very short term, the last 5 days have seen a little dip, down by about 0.94%. This kind of movement is normal. Stocks don't just go straight up. There's always some ebb and flow. Interestingly, even with that strong revenue beat, the shares took a bit of a hit right after the Q1 earnings were announced. Why the slump, you ask? Well, the market can be a fickle beast. Sometimes even good news isn't good enough if expectations were sky high. It's possible some investors decided to take profits off the table after that great year-to-date run. Others might have focused more on that drop in net income and EPS, rather than the booming revenue and solid operating profit. It's a classic case of buy the rumor, sell the news, or perhaps just the market digesting a mixed set of results. It's a reminder that stock prices react to a whole cocktail of factors. But what does the man at the top think? CEO Klaus-Peter Schulenberg isn't letting a little Q1 profit dip dampen his spirits. He remains optimistic and confident that CTS Eventim will achieve its targets for the year. That's the kind of leadership you want to see. He's acknowledging the challenges, like those investment returns and currency effects, but he's also emphasizing the underlying strength of the business. This tells me the captain of the ship has a steady hand on the tiller and believes in the company's ability to navigate through any temporary storms. His confidence is a signal to employees, shareholders, and the market. Looking ahead, the company itself is projecting moderate growth in both revenue and adjusted operating profit for the full year of 2025. Moderate growth might not sound as exciting as explosive growth, but steady, sustainable progress is what builds long-term value. The CEO's perspective is clear. Despite the Q1 profit slump, which was largely due to external factors, the core business is strong, the recent acquisitions are integrating well, and the demand for live entertainment isn't going away anytime soon. They are on track, they are focused, and they expect to keep delivering for their shareholders. The next big update will be the Q2 results on August 20th. Mark your calendars.